In our previous video, we introduced two TradingView indicators that work together to form a powerful trendline break strategy. In this video, we'll walk you through the full strategy, step by step. Let's dive in. Auto Trendline Indicator, based on fractals. Created by Doji Emoji, this Pine script indicator automatically generates trend lines by connecting recent fractal points identified through pivot high and low analysis. Fractals are detected using configurable period settings, and lines are drawn between consecutive points of the same type. Using a default 10-period lookback, the indicator categorizes pivot points as higher highs, higher lows, or lower lows. When new fractals form, they are linked to prior ones to create upward or downward trend lines that extend into future price action. Recent lines appear in full opacity purple, while older ones fade to gray. Users can customize the number of visible line pairs, extension direction, right or both, and fractal display options. Cross-detection monitors when closing prices breach trendline levels. The indicator calculates real-time trendline values using linear equations based on fractal coordinates and triggers alerts upon violations, signaling potential breakouts. This tool supports strategies such as trend continuation, when price respects trend lines, breakout entries on cross events, and confluence analysis where trend lines converge. Its automation removes subjectivity while ensuring precise and consistent trendline placement. AK Trend ID. Created by AlgoKid, this Pine script indicator offers basic trend identification, tailored for SPX or SPY on monthly timeframes. The indicator measures the difference between the faster 3-period EMA and the slower 8-period EMA, applying a slight multiplier of 1.001 to the spread. A positive spread, shown in lime, indicates an uptrend when the faster EMA is above the slower. A negative spread, displayed in red, signals a downtrend. Visually, the indicator features both a spread line oscillating around a zero baseline and color-coded bars, providing immediate insight into market direction. Its simplicity is both an advantage and a limitation. The minimal settings make it beginner-friendly and easy to use. However, its usefulness is confined primarily to monthly analysis of SPX or SPY, limiting broader application. Strategically, it's best suited for long-term trend evaluation, ideal for portfolio rebalancing, retirement account management, and broader market exposure decisions. Although developed in 2014, this straightforward EMA crossover system remains relevant. While more advanced tools exist today, its effectiveness within its intended scope underscores the lasting value of simple trend-following methods. From session to trend trading, from fakeouts to ORB setups. Every position pre-calculated and back-tested, no second guessing. Available as separate tools or as the complete Pro Suite. More info on our website, link in description. Both indicators are good, but can be subjective, and both need some extra supporting information for decision-making. And that's why we use them together, as they complement each other very well. Quick few words on the AK Trend ID indicator. Although it's tailored for SPX or SPY on monthly timeframes, you can definitely adapt it to other instruments and timeframes like any other indicator. That said, higher timeframes will still work better, as the noise will be lower compared to 5 or 15-minute charts, for example. This combo works best on higher timeframes like 1 hour and above, ideal for swing or position traders. You can often see those breakout crosses printed by the Auto Trendline indicator, but without additional context, they might often be just false signals if taken blindly. Same for the AK Trend ID. If you take every signal simply when it changes color, you'll be poor very soon. However, used together, a lot of noise is eliminated. To enter a long position, you need to see a clear break above the trend line, preferably on a high-volume candle. You can disable the Auto Trendline crosses, as we'll be getting confirmation from the AK Trend ID indicator. To confirm the entry, it has to be green, meaning a positive spread. But to get even stronger confirmation, you enter when this line breaks the high of the breakout. This happens on this candle. As you can see, price kept going up afterward. Fixed risk-reward ratios like 1 to 2 or even 1 to 3 usually work well for breakout trading. Another way of entering is on the rejection of the zero line. Here, for example, to enter a short position, price has to break the trend line first. We also see the zero line break down by the AK trend ID. We enter on the retest and rejection of the zero line on this higher volume candle. Both methods are effective. It's just that the chart doesn't always look the same. You have to know your entry options that can appear so you know it's time. It's not recommended to enter right on the trendline break when it happens, as it can often lead to false breakouts, although it can still be a valid trade. In our previous video, we reviewed 5 advanced TradingView indicators with strategies coming your way soon, so you'll definitely want to take note of them.